Awesome. We are live. Welcome back, everybody, to another Friday webinar here with Dr. Van. And also, we have his head of investor relations, Jesse Hollander, who was able to join us for this Friday as well. Jesse, thank you so much for coming on. I know you've been traveling all over the world over the past few weeks, so appreciate you being able to jump on with us.
Good to be here.
Yeah, absolutely. So really unique episode that we have today for everybody out there who's going to be watching live, and then also for everyone who watches the recording after this. We actually have Dr. Van Williams on the ground currently at a park that he's going to be walking us through. I've got some questions, sir, that I'll be, asking you along the way, and then also following up with Jesse Hollander on his feedback and thoughts on as well. But Dr. Van, if you don't mind just kind of doing an introduction of where you're at right now, sir, the park, kind of some of the demographics, and just kind of giving us a little bit of the background of it, if you can.
Absolutely. Happy Friday to everybody. Today is Friday, October 31st, and I'm here in Blue Island, Illinois. And I don't know how many of you have seen it, but I'm here to do a walkthrough, site visit. Wanted to take you on a site visit with me. This is a property that we have the article that came out on proactive sustainable bonds in the Chicago Tribune on October 27th. Very, very thankful for this opportunity and glad to be here.
Yeah, absolutely, sir. No, I appreciate you taking us on this walk with you right now. So, for the investors that are out there that might be watching or might have questions for you, just give us kind of a high level view on the park itself, sir. What makes this park stand out to you and your team? Why is this a possibility for your investment criteria? Just curious on kind of the breakdown of it.
Yeah, I'm glad you asked that question. This is more of from a blight to stability, as we've done previously with other parks. As you know, we're a low-income, social impact, workforce housing, affordable fund for accredited investors, and we are a social impact, a verified social impact fund and company. And I'm going to now turn the camera around so the viewers know what I look like. They need to know what the property looks like, and I'll walk us through it. So this here is a large mobile home park. Right now it's a trailer park because it needs a lot of work. We selected this property because there are roughly 125 residents and families who are at risk of displacement. What I mean by that is there are active evictions to evict them. We learned of this property off market, and they reached out to us because we specialize in turning around distressed assets into thriving, impactful communities with affordable rents.
Yeah, that is awesome, sir. And we're able to kind of we're with you right now as you're walking through it. So talk to me really quick. You made an awesome point there. The difference between a trailer park and a mobile home community that your team, works on, is able to turn around. Curious your thoughts on that.
Yes, glad you asked that. This is for viewers that want the article, they can reach out to myself, you, Jesse, Bill, anyone on the team. They can email us invest@sustainablebonds.com. And when we say trailer park, we'll take homes like this and replace them with brand new, low E, energy efficient manufactured housing, factory built, that's brand new, energy efficient at a very low cost, as we bring homes in directly from the factory. When I say trailer park being converted to a manufactured housing community, is that it'll be a community. We clean up items like this, see the roads. We come in, we put in new roads, infrastructure. We'll have some fencing, playground. We're also a sustainable bonds fund, as indicated by our Morningstar Sustainalytics report for sustainable bonds, sustainable loan. And then, we do a lot of energy efficient upgrades, AI water technologies, and with our nonprofit that we aim to have a JV with our nonprofit to also bring in solar and other cost savings metrics for our residents. You see all of the vacant lots.
Yeah.
That's part of the transformation of transforming this into an energy efficient, affordable community with rents. Our mandate and target is to be 20 to 30% below market rate. And to be fully sustainable, long term. So we're not flippers. We hold on to properties long term. If by chance the opportunity comes up to sell to a mission aligned investor, we'll consider it. And in some limited cases, like we sold a part to publicly traded UMH, which is a social impact affordable housing REIT. And I just
Yep.
want to highlight the surrounding area. This is in a working class community. Really quiet here. I did a drive-through last night, and this is a phenomenal property. And I'll be walking the property over to other areas as well. So you can continue on with your interview. And our Director of Investor Relations, Jesse Hollander, is also here with us today.
Yep, absolutely, sir. I'm going to transition to Jesse real quick, probably as you kind of move to a different area of the park. But Jesse,
Yes,
curious your thoughts on this, Jesse. This asset class, affordable housing, the real impact that this company is able to make while still delivering, great returns for investors out there. What are kind of your thoughts, and what kind of drew you to be a part of the team here? I'm curious.
Yeah. So no, thanks for that. So let me break that down into sort of two parts. I think on the investment part, I think some of the words that Dr. Williams had used, specifically to highlight, off market, right? A lot of it is identifying the properties. Some of it just comes from Dr. Williams' network, right? Nationwide, he'll get a call to go into a property that's off market before it gets listed on anywhere. To look at it, see what the challenges are, understand what we've done before across multiple properties. How can we apply that to this new property? What can we do? And then what would the return profile look like? We have both a financial and then a sort of social metric piece to it. We follow a number of the UN Sustainable Development Goals, right, built out. And so we do this sort of full-on analysis, make sure that the numbers make sense for our investors, that it meets our return profile. And then we sort of move from there. I think another sort of two words also is around this impact, right? Mm-hmm. And then the distressed aspect of it. So the sort of recipe of identifying, knowing what to do specifically. The article, which you're happy to share. The article really talks about some of the specific areas that Dr. Williams will be doing. Had mentioned sort of overall. Our typical approach is water management systems, right? We're going to look to do that. Integrate any of the technology, the low E, efficiency technologies to make it more sustainable. On the other side of the question of what sort of drew me, a lot of it is really just the concept of sort of the doing good and doing well, right? It's sort of a cliche. And if anything, there's a lot of sort of impact washing, right, that we see in the market. What Proactive has been able to do and show, right? Because a lot of what makes, I think, Proactive different from all of the other social impact real estate investment funds is that we spend a lot of time and effort validating and verifying the impact that we make. So whether it's working with third-party organizations like Morningstar Sustainalytics or Bluemark or Impact Evaluation Lab, right? A lot of it is sort of quantifying this piece. So I think the ability for Proactive to sort of say what they're going to do and then do what they actually say and then show it in a long-term approach is very different from a lot of the other financial investment firm. My background is finance and banking, and so there's just been a lot of sort of lip service paid to the industry of sort of social impact. But Proactive generally, and what Dr. Williams has been able to build out since we launched the fund in 2019, I think is really unique, and it shows in the the consistency and the return profiles that we provide to our investors.
Yeah, absolutely. I think you hit on a lot of great things here. I know we have people joining us live that are coming in as well. So for people who are joining us live, we have Jesse Hollander, head of investor relations, who just gave us a great breakdown on their fund and what's really drawn for him. And then we actually have Dr. Williams himself. If you see the other camera here panning around, actively walking through doing a site visit on a park that they're actively looking at right now. A quick follow-up question to you, Jesse, and then Dr. Van, we'll head back to you, sir, probably in the next 5 minutes or so, if you want to get to a spot that you think would be interesting for investors there.
Sorry,
real
go ahead,
quick,
Jesse, if you want to We have one real quick before, because
Yeah.
I got to get over to the next three streets. This
Yep.
is just
Please.
an idea of one of the trailers that makes it a trailer park right
Mhm.
now. And we're in contract for this park. You see the inside. This is what we replace. Is this is the type of blight that we get rid of. That the article in the Chicago Tribune is talking about this type of condition that the previous owners, or the owners, who are going out, that this is the condition of the park. So this is pre-investment and part of our impact committee that we discussed and voted on. Continue.
Yeah, absolutely, sir. And just seeing kind of I mean, just to describe it for other people who are joining us right now, the overgrown shrubbery, the dilapidated buildings there. It really is a trailer park pre your team taking over and turning it into that high level manufactured housing community, which is awesome. Really quick, Jesse, kind of back to you. And I get asked this a lot. I'm curious, kind of your thoughts being the head of investor relations, but for the investors out there who might be looking to diversify, maybe out of just being strictly multifamily, if they are in, or maybe just strictly stocks and bonds, what do you think are some things they should consider, and what are some advantages maybe with investing with your team or elsewhere? I'm curious your thoughts.
Yeah, no, great question. So, when we look at diversification, obviously is really critical. The one element of sort of low income housing, the initial sort of cause for pause, I guess, would be, oh, it's low income, it doesn't make a lot of money, right? It actually works the other way, right? Because if you're looking at a market that is in many ways, government subsidized, there's a lot of government incentives, both from the federal, but more so from the local level, right? Because all of this is in alignment with the local government. So across the country, you have this incentivization where the local government wants to put in funds, right? One example of that are these opportunity zones. So one of the funds that we have at Proactive is specifically our Proactive QOZ fund, right? So it's really just focused on these opportunity zones, which actually got increased investment and interest in recent legislation. So when we're looking at diversifying, you also want to diversify in an area that is consistently growing, where the demand is not volatile, right? There's always going to be demand, across the board for these areas for manufactured homes. I think one data point, I think that's probably good to note, during COVID, right? Not only was there obviously a consistent demand in what we're doing, but because Proactive has built out this sort of resiliency, I guess, over the several years prior to COVID, then during COVID, we had 100% return to our investors. We did not miss a payment, versus some of the firms which are a multiple or several multiples of what we have from an AUM perspective. So the consistency, the sort of national demand, which if anything is only growing, I think is going to be important. It's diversified, but it's predictable.
Yeah, absolutely. And last week we were on with Mr. Chris Nicely, who really dove into the level of demand out there for affordable housing and where the direction of this industry is going. And I can send out, or for the people out there listening, watching the recording, we've got data on that. We have analytics on that we can send out, and it's really, really kind of impressive stuff. Dr. Van, I just want to go back to you really quick, sir, because you've got some interesting stuff going on there. Any chance you want to just take a few minutes, sir, just walk us through for the people? We've got new people joining as well live with us. What are you seeing there on the ground, sir, with this park?
Yes. So what I've learned this morning so far, walking the property, and this is probably about my 10th site visit. What I'm learning more and more, and happy Friday to all the viewers who have just joined. And as I stated before, if you'd like to get information on the article that they wrote in the Chicago Tribune concerning Proactive and that we're taking over this property, article came out October 27th. I'm on site here at a trailer park is what it is today. Proactive will transform this into a manufactured home community. It currently, as it sits, has several code violations. This is one particular house out of say 70 that has some pride of ownership, although it's old. But I'm on the ground, see the railroad tracks, doing a site visit. This park is really huge, spans approximately 8 blocks,
Mhm.
8 large city blocks. So doing a site visit, survey to see what we need to do, how we need to do it so we can get after it once we close the deal, our strategy to come in and make improvements, just like we did in our park. And we have information. If you email us over, we'll send you our investor deck with current income. We're a portfolio of properties producing income. This particular property is very similar to the property we took over that's currently in our portfolio at 121 Fountain View Drive in LaFountain, Indiana,
It's a
Mhm.
huge park.
which
Yeah.
also was featured in the national news, had news articles, and a lot of negative press. We went in there, we took that property over, improved it. We've been in the property. This month will make exactly 1 year. So far, we brought in 33 brand new homes. We've taken out 50 dilapidated homes, made a ton
Wow.
of improvements, implemented AI, water systems, working diligently with the community for the best outcomes, keeping rents affordable, cameras, lighting. If this gives you any indication as to the size of the park, this is the other bank of mailboxes. So earlier I showed you one bank that was like 6 blocks over. And then it's 7, 8 blocks, going other directions. And this is the other bank of mailboxes. So this park is a huge park. And guess what? We're like literally 12 minutes from Chicago, 20 minutes from the heart of downtown Chicago.
Wow. Yeah, that's amazing, sir. That's incredible. And just for everybody that's out there watching, you're really seeing the before picture here of what these trailer parks, these communities look like before Dr. Williams, Jesse Hollander's team comes in and is able to really turn these around and create that pride of ownership and drive, those returns for investors as well and create that impact. Really quick, Jesse, I'm gonna just go back to you as I'm sure Dr. Van, continues to head to the next spot there. But I was on talking with an investor last week, and he is a high net worth accredited investor, makes 500K a year. He's in a 35, I think, or 37% tax bracket, and is out there getting crushed. What are some things, obviously nobody on here, is a CPA, please consult your tax consultants always, but what are some like tax implications that maybe people don't know about by investing in maybe some of these funds out there for the high net worth investors that are looking to lower like their tax liability and stuff like that? What are your thoughts? Perspective on that.
Yeah. So, preface that me also not a CPA, but
Yeah.
a lot. This is a sustainable bond product, right? We have some K1s, also 1099s. So really tax adjusted. Tax obviously is a major concern for a lot of our investors as well, which is why our investors sort of work with Proactive. So we make sure that there's a lot of strategies that are really tax optimized effectively for these properties. When you invest in the fund overall, so we've got the Proactive Sustainable Bond Fund product. This is at specific. We also work very closely with one of our own sort of tax specialists as well to make sure that when we're designing both this fund product as well as some other properties that we're looking to, or other funds we're looking to build out within our pipeline, that it makes sense, right? And so we can provide additional information, and this also drives a lot of the return overall, sort of total almost TCO approach, to investing in Proactive. Is that as tax optimized?
Yeah, absolutely. I think there's a lot more. I guess with the tax specialists that your team works with, there's a lot of help, and I think just perspective that you can provide to high net worth investors out there.
Yeah, it's critical. 35% versus a lot less. It's all accounts. Yeah.
Yeah, absolutely. Dr. Williams, I know you raised your hand, sir. You got something there that you want to go over real quick? Just back to you, sir.
Yes. Yeah, absolutely. So what I'd like to say is that, and this is something we have direct experience with, and as you stated, hey, we're not tax professionals, we're no CPAs.
Right.
And I need to get a quick disclosure out of the way that I missed earlier. is that it's not FDIC insured. It's illiquid. This is an alternative product. Consult our PPM for terms and conditions. We have an opportunity to do a lot of cost seg here. And what that means is that we're able to give a lot of the bonus depreciation for this particular property, as well as other properties in the portfolio. So CPAs, registered investment advisors, we have selling agreements. If you're interested, our fund does allow for a small commission. And as I stated, we're not tax professionals, but we have done bonus cost seg depreciation in our other parts, and then one especially in Orangeburg, and we've had investors who have come in specifically for that reason, seeking a certain amount of depreciation that they can write off in their taxes and offset some gains. Other fund that we don't talk a whole lot about, that we've had a considerable amount of interest in and investment, we're in our third year of, is our opportunity zone fund that we have. So either way, if you need help with tax depreciation, and as I stated, consult your tax advisor. We have both bonus depreciation for current funds that are producing income, as well as opportunity zone funds. A park like this will provide a ton of depreciation. As you know this well, Jesse Hollander and Jesse Fuchsia, that we come in and cost basis and a lot of depreciation that can be taken up front. And as you know, the current administration has brought back a considerable amount of tax benefits as it relates to tax depreciation and bonus depreciation cost seg.
Yeah, absolutely, sir. I think there's a lot there to unpack, and I think there's a lot of value that your team can bring, just with your background, and then also the tax specialists that your team has to help those investors out there that have a huge burden. And like Jesse Hollander said, 35% is no joke. That is a huge burden. And I think I just wanted to be clear that there's solutions out there and ways for you guys to help people that maybe they don't know about, which is awesome. So, Jesse, I just want to go back to you really quick. Anything kind of on your mind, anything that you think I'm missing, or anything you think would just be pertinent for the investor base out there as we're kind of talking through this?
Yeah. So what we do is not necessarily complex, but it's not easy, if that makes sense. So it's understanding, obviously identifying the off-market opportunities because of the network that we've developed. Again, at the government level, at the individual level, we've got partnerships with nonprofits, and frankly, we also a lot of the properties that we hear about is from our own investors who will say, "Hey, I'm looking at this park. Obviously it's not on the market, but I know about it because my buddy of mine, has this. Can you check it out?" So the non-complex part of it is just buying something, buy low. The difficulty, the reason why it's difficult to do and to sort of replicate, it's knowing the right solutions, it's knowing the right people, right? It's hiring locally. It's being on the ground and speaking with a lot of different stakeholders, right? It's not just the investors or the owners, but it's the residents, right? It's people who are working right within the property, and getting that sort of 360-degree view of the area to know exactly what needs to be done. So there's a template, there's a general template that we apply across. We've gotten about 25 parks, or properties, overall. And that's, 900, individual, properties. But at each property level, we then do a more granular, what is the financial impact? What is the social impact? What specific solution works? What is there's a lot of nuance in working with a lot of the local utility companies, right? That we sometimes have to address, and even so we provide a lot of that work, and that's how we're able to achieve the return consistently that we've been able to provide since 2019.
Yeah, absolutely. I think one thing just to highlight there also is just, you mentioned it, the network and value of Dr. Williams, 2+ decades of experience in the industry. I think 6 or 7 years alone as a fund manager, but 27 years investing in real estate. You build some serious connections, some real network that's able to drive some awesome things that we're seeing your team be able to do, which is really just cool. Yeah.
Sorry, one other thing to note, a lot of the properties that we bring in, right, that we purchase, it's because Dr. Williams also has, specific licenses as a wholesaler. Dr. Williams,
Yeah.
you can expand on this, as well. But so we're able to purchase a unit for, I don't know, 40,000, 60,000, 50, 40 to 70,000, but it retails for 120, right?
Yeah.
And so just having the license, which gives us access to the wholesaler, which gives us access to the network, there's sort of already, 2x, return just there, let alone all of the improvements we make within the property, within the area, right? Overall. And so we try to, identify where the, a lot of the flywheel essentially opportunities are.
Yeah, absolutely. And Dr. Williams, I know you raised your hand as we were talking there, sir. Do you have something you want to hit real quick?
Yes, to Jesse's point, Jesse Hollander, we have a retail dealer's license. What that means is that we bring properties in, brand new low E manufactured homes. Good morning. That we bring in brand new low E, energy efficient, energy certified through HUD, manufactured homes with heat pumps, sustainable, everything in the house, from appliances to doors to windows to, and they're brand new. But we bring them in at cost from the factory, so they come directly from the factory. So when we come into a park like this, with anywhere from 90 to 125% return on investment at a minimum. And quite often, we come in just on a land value basis alone at a 3x. So what that does is it secures return for investors. It's very stable in any economic conditions. And more importantly, we're like 5 or 6x on impact. So for the viewers who are watching, we have videos, we have case studies where you can see our demonstrated impact, our executed proven model that we've executed our impact. We have a robust sustainable bonds. We have a IMM framework, as Jesse indicated earlier. We're third-party verified by Morningstar Sustainalytics. We're a PRI signatory. We have impact evaluation labs. We've been assessed by impact evaluation labs, which, by the way, was a phenomenal experience. Love it. Really great experience. Also, we have a Blue Mark verification, Blue Mark verified, and we're also being assessed for OPIM signatory. So as it relates to impact, we have all the metrics. More importantly, we have the demonstrated impact. We're not sitting behind a desk. This is not a theory. This is not something we may do or hope to do. No, this is something we've been doing since November 2018, formally as a fund since August 14th of 2019. As you indicated earlier, this is my 26th year in real estate, 6 years as a fund manager, the other time as an individual real estate investor, and my entire career I've been in the helping profession. I have a doctorate degree in psychology, and so social service housing, impact housing, and affordability, even prior to starting a fund, has always been the intention and always been the mission of my life's work. And as you can see in the distance, that's the other side of the park with the, hey, how you doing? Remember I was saying that really huge park. Goodness grief, I didn't.
Yeah, you are getting your steps in today, sir. That is for sure.
Oh, absolutely.
Which is
Love
awesome.
it.
We're right here at the. Yep, go ahead, sir.
Okay.
Nope, go ahead.
So we returned $7.5 million to investors. Do we have 15 seconds to get a quick blurb from one of the residents who are here, who's an activist who can talk a little bit about what's happened and how we've come in and what our plan is?
Yeah, absolutely, sir.
Mr. Joe, you want to give a quick blurb on how you've organized the community and what it means to have somebody come in?
Well, yeah, basically started grassroots in 2030, We've got at least half the people here that have organized, and all of our hard work has gotten us to this point, so where we have somebody interested in the park, like yourself. We're really excited to see.
All right. Thank you, Mr. Joe. I appreciate you.
Absolutely, sir. Yeah, we're right here around the 30-minute mark right now. So we usually trying to wrap this up around the 30 to 35 to 40-minute mark. I have some questions, sir, that I gathered from your DMs this week, just as we were talking about this walkthrough. But anyone live out there in the audience, I'm just going to open it up here for, a minute or two. Any questions for either Dr. Williams on the ground or also Jesse Hollander? Anything we've gone over today, or maybe something I missed to ask that you guys want to ask them? Feel free to raise your hand and ask away. Awesome. Okay, I've got a couple of questions for you. And for anybody out there that's live with us, just feel free to raise your hand if something comes up that you want to ask. But I just got a question here from Maria, who's an accredited investor and reached out to you this week, Dr. Williams. She was curious specifically about the green implications of what your team is able to do there on the ground in these communities and stuff like that. Can you talk through just a little bit about that, the green aspect of it?
Yes. I'm glad you asked that question. And thank you, Ms. Maria, for your question. Yeah, we focus on having the smallest carbon footprint possible. So everything we do from renovations, so we're in manufactured housing, multifamily, and motel SRO properties. Our renovations are green. So, for example, if we have to trim up any trees, we do mulching. We do energy efficient doors, windows, floors, the highest R values for insulation, low E, low flow toilets, zero emission water heaters, and factory built houses that are HUD code, that are energy certified and HUD certified for the highest Energy Star and energy standards.
Yeah, that's awesome. That's incredible what you and your team are able to do. Really, really powerful stuff. And just a follow-up question that another investor in your DMs had this week as well, sir. The question was, how much capital in dollars have been returned to investors over the last couple of years? Do you have a number? Do you know a relative number?
Yes. So relative. So since June of 2020, mind you, this is now 2025. We returned $7.5 million to investors. Also, I forgot to mention earlier that I'm also personally $6 million invested in the fund of my own capital.
Wow, that is incredible, sir. And then just another question here. I'm going to actually point it to Jesse Hollander. I think might have a perspective on it. The question, Jesse, was somebody out there. He's only invested in stocks his entire career, contributing to his stocks and bonds and stuff like that. What do you think he's missing by not having maybe a portion of his portfolio allocated to something like a sustainable bond or something that you and your team can offer? It was just a general question, kind of like that.
Yeah, I mean, stocks is important because there's if you choose the right stock, right, like a good company is not necessarily a good stock, et cetera, et cetera. So that's important, obviously, as part of your overall investment portfolio. That being said, a bond product that is dependable, right, that's based on real estate, right, that you've got, and one of the core values that we offer is the stabilization within the rent, which means that it's predictable, it's dependable. Again, there's no sort of seasonality to it. It's defensive, right, versus some some more equity oriented products that you might have out there. So from a bond, not just a bond product, because there's lots of bonds out there, but a bond product that is validated, right? Which is why it was important for us to get this validation from Morningstar. It's proactive, and then it's Santander, and we're the only low income affordable housing bond products that are out there. So having a bond as part of your overall investment portfolio, I think, is going to be critical for resiliency and just to weather any financial or climatic storm as we're seeing today with Melissa.
Yeah, absolutely. And Yeah, for anybody else out there that's listening, watching, always feel free, shoot Dr. Williams a DM on LinkedIn if there's more questions that you have. We can include those in our weekly webinars, and we can also just get back to you the same day and make sure we answer those. We're going to get ready to wrap up here, Dr. Williams. Just any closing comments, sir, from you, or best ways for people to reach out to you and your team, so that they can learn more about this, either if they're watching live or if they watch the recording here within the next few days.
Yes. Thank you again. And again, happy Friday. So you can reach us at 1-800-626-2089. Again, 1-800-626-2089, or invest@sustainablebonds.com. And my direct number is 803-989-8264. Closing comments, I'd say, be a part of the solution, earn some current income with above market rate returns, especially for our impact investors and our hardcore impact investors that value third-party impact verification.
Mm-hmm. Yeah, absolutely, sir. I think you hit the nail on the head there. And Jesse, I just want to say again, thank you for you to coming on. I know you've been crisscrossing the world, multiple continents in the last month, so I appreciate it. We'd love to have you on, every Friday if we can make it happen. And any closing comments out there, for the audience, either watching live or who watch the recording? Any kind of final thoughts, from you? Just curious.
Yeah, I mean, what you're seeing right now, the Dr. Williams is this is an everyday thing, right? So he's either on the ground looking at properties, or on a plane going to the next property, where everyone across the proactive team, like, we're constantly looking at either on the ground, looking at these areas, speaking with who we need to, and then from my perspective, understanding what our investors are looking for, and how we can match our this product across multiple funds to what investors need. So thank you for the opportunity to be part of today's discussion as well.
Yeah, absolutely. No, we'd love to have you on every Friday. I think it was a ton of value, and I think hearing your perspective as well is a huge help. So we can't thank everybody enough. Again, we try to wrap this up in about 35-40 minutes. We're about there right now, just to keep it short for people's Friday morning. We'll be sending out this recording. We'll be posting it live to LinkedIn here in the next few days, and then also we'll be sending it out on our email list. So any questions that come up, any follow-ups, please reach out to our team either through the contact that Dr. Williams put out today or through LinkedIn. We can set up phone calls with you and Jesse Hollander, and also you and Dr. Williams to answer any questions you have. But we're thankful, and we can't thank you enough. Dr. Williams, final comment from you, sir, to close us out.
Just thank you. I'm excited about this park. As I stated, we were in the Chicago Tribune. Any of our viewers would like information on it, send me a message, or Jesse, either of the Jessies, or anyone on the team, reach out, learn more about our demonstrated impact and our proven model, and how we are changing lives sustainably and long term. And I appreciate the viewership. Really, I do. Oh, and my book is out. My second book, I forgot about that. My second book came out September 1st. Title of the book is Driving Social Impact Investment. Strategies for properties in low-income, underserved communities. NOAA strategies. Thank you.
Yeah, absolutely. We wish happy Friday to everybody out there. Happy Halloween also for the people with kids who will be trick-or-treating tonight. Again, we'll send out this recording, and we will see you next Friday. Awesome. Thank you again.
Thank you.
All right.